Good. Well, good afternoon, everyone. Scott Henderson, shooter, and hey, we're going to go over some charts, see if we can make any sense of this mess that we seem to be in again. Middle East conflict and everything else. And of course, at the end of our presentation, please do review our disclosure. Okay, let's start off with the S&P 500. Now, this impulse wave is this count right here. I actually just moved it over there. So right now I'm thinking we have a pretty shallow retrace, maybe 651. However, that is wave one here. So if we move this and drop it into that same spot, we have the potential of following through here. I do not think this becomes an ABC structure here. I think it's an impulse. Now, from a technical standpoint or an analysis, impulse waves work differently than ABC correct. For example, in an impulse leg, often what you have is 5, 3, 5, 3, 5. So wave one is a impulse wave. Wave two is a corrective leg. Wave three is an impulse wave. Wave four is a corrective leg. And wave five is an impulse. So immediately when you look at that structure and you see something that appears to be a five wave, what does it imply? That it's a wave one in a much larger formation. So with that in mind, let me jump out to the monthly because I want to give you guys a visual of what I see here. These are the drawdown numbers that I see potentially here. I mean, we have some decent downside ahead of us. However, I'm going to come in and I'm going to put a little thingy here. I'm going to say this has to break. And that needs to become resistance. So we got to break below that 650, which is a huge psychological level from where we are right now. And then it needs to hold where we can't get back above it before any further continuation occurs. Then we have a little noise that comes in around 626, and then it's here. All confluence is back to 490 to 520. Now, I'm not sold that a bear market is here yet. That's the challenging part. I honestly, since October, I think it is. It's been extremely challenging to read this because the flow is not supporting the move that I see in the chart. It's just gotten so thin, it's absolutely insane. And the change to pre-market, almost all of our moves every day occur in pre-market before the New York session. So there's these two levels of noise that we used to use to get a very clean visual that have now become a little bit distorted. However, the person who wanted to go out 3 months and target a 630, 560, and a 500 put might be very prudent here with what's ahead of us regarding oil. And that's just, I'm going to leave it there. I have not started to buy those yet because I do want to see this break and see if this holds, because it's very likely we get a good bounce here and we could bounce right out of this. Just looking at the wave structure that's here. I've got a 2 potentially deeper. I've lowered that from where my initial thought was because I was thinking it was going to be shallow, and then I deepened it, but realize there would be nothing that would prohibit us from testing this floor. And this happens to be a huge wick off, which would be like a perfect psychological level for us to test. All right. Let's jump over to the NASDAQ. I have a very similar look, and I'm just going to go off the monthly here. Nowhere's near as weak as the S&P 500. Nowhere's near as weak as the Dow. And nowhere's weak as IWM, in the whole structure thing. But this morning, and forgive me, I didn't actually work this up to the downside and put a little pattern on there, but we seem to be coming off more aggressively in the Dow, which is typically a flight to safety. And here again, I'm going to talk about different things that echo different noises to me as I look at them. And, the Dow is telling me that nobody believes this is risk off. And we're sort of seeing the same thing when we look at the VIX. I mean, right now, the VIX is at 32. Roughly 34 bucks. Equality to me brings us back up to, roughly, what would that be? So about $78. I think it's viable here, but we need the market to believe and buyers and sellers to believe that this is the major crisis. And I just don't see that yet. Hold on a second. I'm shutting off my phone because I don't know what the heck was happening there. It's like it just connected me and I got 50 gazillion messages. So the short is VIX, we physically could be long until this break. So below 32.43, I would be out if I was in any longs. But it it is warranted with what's going on. Oh, you realize the hit that occurred this morning in Iran pretty much, unless it just stops here, we have no additional infrastructure hits. Prior to today or prior to this morning or last night, whenever the hit occurred, it was more a Straits of Hormuz issue in restricted paths. We hadn't had destruction of the supply mechanism. The hit in Iran changed that game. So my opinion is that 120 oil is pretty much given here, even though it might just tag the prior high and then wick off. As we look at the numbers that are coming in this morning, I was absolutely surprised when I got up, heard the news. We weren't over 100 bucks and pushing 1.5 or 110. In pre-market, we did pop there a little bit. But right now, here again, I'm seeing all of these mixed signals, and I'm sharing that with you guys and gals because I don't necessarily have conviction that we're going to come out of these lows, and I don't have conviction that we're going to follow through lower, but my bias is lower. I don't know if that made sense or not. I'm going to jump over and now, recently I put out a TradingView link to our sleeves that we've been working on for, 3 months now, 4 months now, trying to build out a play in infrastructure for AI. Now, on that premise, I'm hesitant, and you'll notice that I've been very selective. I haven't really been adding a lot anywhere, and that's because I don't have the conviction that this Iran issue is going to be done quickly. And it could potentially provide a significant disruption to the build-out. So these large CapEx expenditures, and I'll spend a second here, could be pushed out very quickly if we have any supply disruptions, for example, in electrical or utility infrastructure to build out the grid to be able to support those data centers. So you literally could see somebody who's committed to 100 billion in capital improvements towards AI say, oh, no, we're not doing it now. We're going to do it in 2030 or 2035 because we don't have the materials to build it. So I expect that's going to be another news scenario. And I sort of want to hear that a little bit where the noise comes in and maybe it takes us down a little bit in a couple of these names before I really start jumping in. Where I have some conviction here is in what are some drivers related to AI infrastructure that is related to fuel. And that's where I'm going to jump first. Now, biofuels, I pointed this out, I think it was the beginning of the week. Now, I'm going to stay on a monthly chart because I want to give you the breadth of how big these are. And, right now, I have no positions in biofuels. And actually, after I mentioned it the first part of the week, I'm like, shoot, I was an idiot for not jumping on board because every single one that I had highlighted in our biofuels as far as the build out for the AI infrastructure is running. So right now, Rex looks to me like we're heading up to 85 bucks. It's only 41 bucks. Any back test, anything in here, nice solid general. We're probably going to do something just like this. As soon as I get beyond this FOMC, this is one I probably will add. Let me jump over to AMTX. Now, right now, we have not taken out the confirmation line at 3.7. We're wicking off just a little bit. Unfortunately, this is a stock that likes to wick off here. So it's challenging to hold this push here until we take out these highs. It really is. It's challenging. Even though it's a profitable company now, I'm looking at the chart and I'm saying, well, what's the most likely outcome? Well, anytime you have a descending wedge, it pretty much, there's an MO, there's a formula. So you have that trend, right? We've tested the trend on the high side, and then we have the trend on the low side. And what often happens is it goes right here. We get this little squeeze back down to the lows, and that's where we pop. So structurally, from a technical standpoint, if I had a position open and I sold mine like an idiot, didn't hold for earnings, seems to be the case this month, doesn't it? All right, so I would probably be taking some profits here and waiting for it to pull back. However, if I'm wrong, I would add it back on a breakout above that wick right there. So roughly above that, what is it coming at? 292? That would give me some conviction that we're going to continue to the upside. All right, let's look at GEVO. Nice little wedge breakout 70% of the time. Target is roughly about 971 according to the wave structure that I see. And, I've started to use this. I only like the visuals. I'm terrible. I like visual. All chart patterns is a new strategy that I've put in there because it just gives me the visual of the targets. Basically, they're fib extension targets. But I wanted to share that in case some of you want to throw it on there because it recognizes all the patterns and it gives me a 3 second view. I like to look at it because then I can compare it to what I'm seeing as far as the fib extensions. And individually with this particular name, to me, I'm looking at a fib push off of this roughly 92. So, we're looking at, a solid run to the 3618 at 1140. Well, we're only $2.35 there. That's got some significant upside. That's why I like these rates. All right, let's take a look at GPRE, Green Plains. Nice one. Putting in wave 2 looks like it's done. Looks like we're heading to 3. Targets are up there around 87. ADAM, similar look. Now, again, I'm going to come in and I've got a lot of charts to cover, so I'm racing here. Sorry. I would say if it breaks below that body of that candle at 67, I would be trimming. Otherwise, I would be holding any position unless it breaks that 62.49, because that's another nice move back up to about $90, and we're roughly at about 71 here. Now, DAR, very similar look, except for we're going to hit our fib target right around here. So in this scenario, I would wait for a little bit of a back test, maybe throw a fib up there, give you a visual. I still like the structure of it, but just measuring this wave, assume we get right here. So maybe back to $50, $52, somewhere in that range. I'd get interested in that name. Now, I want to jump up and look at 2 names in the energy category. TLN, let me come out to the weekly, give me a visual. Target is up here around 708. We pretty much hold this. So I would say, yeah, this is a name I like here because it's in the thesis of continuation with oil. So, my thought is if that breaks invalidation or breakdown, that's when I would trim roughly at about 306, 307 in that range. Otherwise, I think it's got a great shot for a breakout. Then I wanted to cover CEG. It's got another target up here around 562. Again, the fibs are lining up really nice the way the structure looks here. Maybe we pull in, off of this fib number, put it in here. 50% back is 368 from where we are here. Confirmation of the breakout for me would be above the body of this at roughly 329. If it broke below the body of this candle, I would be out, trim it. I'm just highlighting that because I want to make sure everybody understands where I think I'm right, where I think I'm wrong, just so you guys get a good visual of what's going on. All right, then we're going to go to metals and mining, and we have a few names here. POWI. Now, we put this out in the weekly watch list on Monday. And, it's just sort of waning here, but scenario confirms on a breakout above. I'm looking for this to get taken out. That's our confirmation that we're going to continue in the trend as far as I'm concerned. Don't really get interested in trimming unless we close below this. And notice how close we are here, tight, fairly split. So I would look at that as our invalidation line right there. All right, let's look at SI, Shoulder Innovations. Now, I would have never even looked at this name if it wasn't for AI. Beautiful structure on the wave. Nice impulsive push, flush back. Right to about 78.6, if I'm correct with my eyeballing it here, because I didn't draw it on there yet. Come in here, boom, right to the 78.6, wicked. Technically loves to bounce with these kind of names in that scenario. So target is up around 19.20. We're about $15 here. If I haven't looked at the cash secured puts. I'm more inclined, just because how short this tape is, to sell some cash secured puts than buy calls on this, but common shares is probably doable as well. LAC is getting really interesting here. However, could possibly put in, Flushing Drive 1, Flushing Drive 2, Flushing Drive 3. So in that scenario, we could overshoot this kind of support here. So maybe it pushes down to about 420. It's a good spot to take a shot because I think lithium is, something that's pretty much guaranteed to head back towards the upside at some point. SQM, beautiful structure here. This looks really good. Now this is, I'm forgetting exactly, I think it's coal and a couple other things in South America or Brazil or wherever it's at. But target, kind of conviction back up around 111. This is another name I like from cash secured puts here. Really doesn't confirm until it gets back above that 81.25, at least it's for continuation to the upside. And then if this closed below the body of this candle, which is really fairly close, I would trim or limit. I wouldn't necessarily fully exit in this name because I do think it's got some significant upside. And then if I took out the body of this candle, I'd be out of the rest. That would be my thought pattern. But this is going to be a benefactor. Realize if the thesis is right on what happens with fertilizer, potash, and that stuff, and basically the thesis is that the limited amount and the additional expense in natural gas is just going to naturally squeeze the supply. And we're looking at as much as a 40% decline going into 2027 from what just happened in the Gulf. So I think the fertilizer potash is a longer term thing. And what Trump did this morning, I had no idea that there was even any kind of a law out there that could catch us on left or right. So I just had no idea it was there. It just hit, it's what it is. So we're down. Actually, I'm about flat. I think I'm down like $500 between the, but looking at this is a name I like back to the upside because it gets us outside of U.S. supply and demand numbers and puts us into another producing market. And the chart just looks wonderful here. I mean, it's an ending diagonal. So, I mean, worst case scenario, we get a flat top, is sort of a thought. An ending diagonal basically means that wave 4, so this is wave 2, this is wave 4 is broader than wave 2. So we could end up with a flat top, something like this. Just a little higher high because that's sometime place. All right, let's look at LEU, Centris. Like the look here as well, that descending wedge. We've already popped out of it. It really doesn't confirm the back to the upside for me until we get way up around 343. So, I mean, we're early on this name. However, just mind the lower low. I mean, we take out the body of that candle at 186. I would be out of that. But this is another name that looks solid here. All right. ABB India. Now, for some reason, it's doing really well. A little pricey on the share value. It's outside my personal range as far as my own personal investment rules. But it falls in the category of metals and mining. And it has a significant exposure in India. Now, I don't know how diesel is going to affect it here, but ultimately, unless it takes out this prior body of this handle on this high right here, it really has done nothing wrong heading back to the upside. And it does look like that's where it's going. Looks like we're heading right towards this target, about 7,800. All right. I think it was one more I was going to cover. AI Core, ANET. Beautiful look. Nice wedge pattern here again. Upside targets are saying 251. Good name to sell cash secured puts on. I'm wrong if it breaks below the body of this candle. I mean, right now, through the noise, realize this drawdown, what have we been doing? This is a weekly chart. Green, green, green. So what is it? It's relative strength. I like relative strength right now. So this is a name that, as soon as we're past FOMC, I'm probably going to put a piece on in this name. And let's go to our, if you can call them core positions or just saying keeping my feet in the water. Number open. Okay. Clean Spark. We opened it this morning. We're looking for a target of roughly 1320 on our wave 3. However, targets are extreme here relative to where we are in price. I mean, we're looking at, more than a double based on the suggestion of those fibs with how much volatility here. So if we do get back upside, one reason I like the chart, risk reward was on the high side. Like it was 6-to-1 risk reward on the table. That's something that I just can't, if I'm going to risk capital in this market, that's the kind of play that I'm going to jump on. All right. MOS, we've got a position open on this one. Again, we're just trying to build it. We've got some cash secured puts sold. We got some common shares open. We're looking for a push back up to about 47. Looks solid to me. LXU is, fertilizer, potash kind of look. I see maybe a flag here, which would actually be beautiful. And then we push. Realize the big day for the Straits of Hormuz being closed is day 23. All hell breaks loose on day 20, which is the first this weekend or the first of next week. So as far as a target on this one, let me come out to the monthly. I thought I had that chart worked up, but I guess I didn't. All right, so the fibs, as far as the extension here, we are looking at roughly 50% back is going to give us up to, roughly about 1822. This is a very shallow one, and we look like so we're in wave 3 on this leg, I would call it. So I would say we probably do something like this, and then we continue to put our top in. But it all depends on how hard fertilizer actually gets hit and how much scarcity there that actually occurs in the supply. So I mean, the reality is the 3618 in a scarce market is totally viable. And if we just drop an ABC here, which is one reason I jumped into these names, because I saw a decent risk reward to the upside. Equality is right up at that 101 as far as the target. All right, now Fortnite, just trying to catch us. Done nothing wrong here at this point. We just put on common shares. I didn't put any calls. I wanted to see it break, get back above the 50% of this candle, and then I was going to add some kind of calls in there. So roughly I was looking for, the game plan was above 86 on a close or a weekly close above there. Then I'll put on some calls targeting those 105s. UAN is another fertilizer potash name. This one's working. Didn't give me any heat, sort of balancing out for the other ones that gave me a little heat off of that Trump news this morning. All right, so, this one roughly 50% back is 107. Now I'm going to call this a wave one here just because of this pullback. I'm going to say that's a consolidation zone. So I'm going to call this one. Wrong tool. Sorry. So I'm going to call this a one. Probably doesn't push to the ones. It's very extended at the 1618. So I would expect a little bit of a pullback here, and then we probably head towards the 78.6. Then once we take out these highs, which is right here about 179, then we could be a launching pad here just with that look. I mean, realize if all I do is draw an ABC pattern, and this is pretty much across the board, I think, in the whole sector when I looked at, all of them look the same. Obviously for the same reason. So, equality here actually is much higher. Quality is up here around 1370. Which is way the heck up. Just huge. So I don't know that it goes there, but I like the risk reward. Now ICL, I like the back test here after the pullback, looking for a fib to get us back out of here. So this is more of a 50% back play that's attached to fertilizer and potash. So 50% back is about 655. Calls, there was a decent volume there, but at this point I just have common shares open on that. Now IPI, it's working, got a little bit of a wick off, which is right where it should. So we got this little bit of a pullback. It ends up being a little deeper here on this close. But I think that 57 is totally viable. Now, one thing I'd like to point here is this is kind of a meandering slope. That changed with these four candles. It's now very euphoric. It's now this slope, right? So, I'm going to come in here and just put when this name moves, it likes to move. Let's be candid. It does not slow down and it just goes. So I'm going to just steal this and I'll move it right over here. I'm going to put it here, just shoots and giggles right here. Measures up to 320 from where we're at $40. If we really get that scarcity that hits fertilizer and out of, I'm running these swarm, with 1,000 different AI agents, and it's basically, it looks at everything globally, and we're looking for the highest risk reward setups in that thesis, and fertilizer is one of them. Gas Aline was one of them. Problem is I couldn't find a good vehicle besides UAG or UGA to really where that would manifest well. And fertilizer actually had not only the structure from those swarms run with AI, but also the technical structures in the chart. So, it's like, okay, yeah, my bias is that, hey, we've got the macro and micro. We have this is in the direction of the Straits of Hormuz. The charts support it. So we got the technicals behind it. If I'm going to put capital at risk here, where I think we potentially could have, which by the way, I think we potentially could have a 20 to a 40% drawdown in equities. If this war continues and we end up in a ground war, once this extends beyond 3 months, it's going to be brutal to equity. And so where I want to be in places that I think will benefit from those catastrophic events. I don't want to be on the side of what I think might go. And that's where I'm pulling back just a little bit. And I just want to be very clear on, I'm pulling back a little on the AI infrastructure until we see how this war manifests, because I think there's a huge supply chain disruption there. And I don't know how long the Magnificent Seven sticks to their capex, and we don't have news there that gets them to pull back. So I get very interested when we get that pullback on entering those names, because the build out's going to occur. The question is, does it occur quickly because we have the resources to build it, or is that whole cycle going to be delayed? And obviously, if it's delayed, we don't want to be sitting in those names. We'd probably better off finding another victim for the moment and focus on those for a while and then go in a little bit later. I don't think the thesis will be wrong, because God, I'm the way AI is growing right now, I don't see the capex being stalled out too much. But as the prudent kind of investor that I am, I have to be conscious of that. All right, so let's go and look at some of our requests. Where are we? Okay, SNDR. That was a name that we put out in our report for being short. it's working. WERN, we put that out in our watch list to be short. It is working. NEXT, we put that out maybe 3 weeks ago. As long, it's working. I would move my confirming trend support up to the wick, the body of that candle, because we cleared there. So, my anchor would move up to roughly $6 versus the 112. Working, done nothing wrong. GLD, we put out a short on this. It's working. It's not as aggressive as I would like, but it's working. Let me go back to a weekly chart. I'm just realizing that I'm there. So I think this shelf at 402 is totally viable. So I'm still looking for 30, $40 still to the downside. SLV we put that out at the same time. Right now I'm looking for a pullback, equality and ABC to $50. Now, let me explain that thesis on metals and why. All right, there is a crude oil correlation to metal, right? When crude oil declines and becomes flat, right? Quite often metals run. When crude oil spikes, the most common response is metals come out, because now people who are sitting in the sideline on metals for a flight to safety, they now are buying oil. And that's the dynamics there. Just so I can explain that, because I've already had 3 questions about, why the heck would you short gold here? Why the heck would you short silver here? That was my thesis and why I would, and this is just the insanity how I look at the markets and see the dynamics across the board. But there are correlations that become headwinds or tailwinds for us, and we want to make sure that we recognize what those are and, of course, how we can take advantage of those. So if you're short silver, hold. If you're short gold, hold until it breaks below or above, the body of the next candle. Now, the UGA trade that I threw out there, working perfectly. And, of course, this is another name I'm not in. I should just buy everything I suggest. All right, so we're overextended here. I think we get up to about 114. Now, I had a very detailed instructions there on how to manage it. One, you can go naked on the calls. So you're selling naked covered calls, selling your shares for a profit, running a tight trailing stop, right? Because at this point, I don't think we back off here. I think we have a mission to that 114 here. However, you want to manage your risk by slowly trimming the common shares, because basically it was a buy right trade. It allows you to book some of the profits in your gain at the same time where you're still holding the upside in those calls. So the trim ratio is at 50%, trim half, right? At 75%, you take the rest off. You don't ever, whenever you're selling premium, you really never want them to expire worthless, because the reality is your capital usually is better off elsewhere, because once 50 to 75% of the move is already baked in, what you're doing is actually keeping more risk on the table. So that's just the psychology of how to manage a covered call or a cash secured put. Or you want to roll to something else, or take a piece and roll it to something else. All right, let's take a look at GitLab. I don't like it till we get back above this. I drew this. I've got an alert right here. Actually, I'm supposed to have an alert there, and I don't. Until it gets back up, my count has us coming way the heck down to about 1690 here. I don't think this is, it's not done. It's confirming to the downside. I wouldn't chase it here until we get some kind of divergence here in RSI or the MACD, or both. MACD cross or both. We have both conditions with the RSI and the MACD cross. All right, CrowdStrike really looks pretty. We came right down into the clean risk zone, wicked off of it, and that was right at about the beginning of this slowdown or drawdown. It was just a little before the war started, and I didn't like the idea of where the top was in equity, so I wasn't adding longs at the point. So this is a very constructive look. I believe this target has been invalidated with this. We won't have confirmation until we take out the wick of this candle, but realize what we're experiencing now on the internet, and I don't know if you're experiencing your region, but in my region, it's like anything in the cloud doesn't work half the time. I mean, it's being disrupted by either hackers or the fact that the federal government using all the bandwidth to run the drones, because we have all these drone hubs at different places in the United States, especially out in Las Vegas and some of those areas out there where they take the broadband from consumers to use it for actions of war. So I'm seeing that. CrowdStrike is somebody that helps protect those networks. So I don't see their business waning here. We clearly pulled back well to the 618 on the corrective side. So I'm now looking back for that target to about 665 in that range. I think it's totally viable. Now, Microsoft, I'm a little disappointed it pulled back here. Nice, right in the clean risk zone. We tested below there, which is why I think it was a good spot. But to be very frank, it doesn't look done here. And let me just clarify what I mean by that. And I'm going to pull this off. Maybe that wasn't our 3. Maybe this was our 3. Maybe this was our 4. And we get a 5. Structurally, it actually looks prettier. I hate to say it. So we closed below the body of that candle. I highlighted at 393.64. I would not be holding longs in that for that reason. All right. Google looks pretty good here. Nice, clean first level. It doesn't really look done. MACD is not crossing. We're kind of confirming on RSI. So when I look at these tools versus what I see in the tape, I see a very euphoric tape. And my bias on Google has not changed. So for me, Google is a hold until we close below 275. And hopefully you've owned it since 150 or 175 bucks. That's my 2 cents. All right, AA, very beautiful look to the upside. Flagged, took it out. However, we're now running into some decent resistance. We got a peaking drive 1, peaking drive 2 in this wave. We likely get a peaking drive 3. It's measuring a fib target back to about 30 bucks. It's tough to chase this here, even though, I suspect the supply chain hits this a little bit. So my bias is take profits if you own it. There are better names to enter, and I'll go back and just say biofuels. As far as the look, now we looked at the GEVO, RCAT, same scenario, peaking drive 1, peaking drive 2, maybe we get a 3 and then we come off. Count says that we're heading lower. So I would say that my invalidation closes below the body of this little puppy here. We have some confluence there too. We're pretty close to confluence. So, roughly it closes below that 14 bucks. I'd be trimming, but I'd be taking some profits here. If you held it since, when we got the confirmation of that breakout since 9 bucks, if you've been in it since then. Frog, it's getting out. It's going to get out. It's actually quite a ways to the I'm just looking at the structure. Could be an ending diagonal. I don't like that look. Hold on a second. Let me put some waves on it. ABC. I'm watching my daughter's dog and he's over here snoring. Okay, we're going to call that a 1. We're going to call that a 2. And we're going to call this a 5. However, if we're wrong, ABC structure, ABC, ABC, that means our 3 is really here. Our 4 hasn't come in yet, which is here. And our 5 will likely come in here. So that's the challenging part here. This body, we close below this. If you're in it, it's a good chase here. It really is, even right here. If it closes below the body of that candle at roughly 42 bucks, I would be trimming it. That's just my thought on the way that structure looks. All right, Reddit doing what it's supposed to do. It hasn't taken out the low till it closes below that 127. It's build a position to head to the upside. PSX looks bearish to me. PSIX, Big Sky looks really bullish. Really bullish. Look at the strength. Measures up to about 62 bucks. And again, I'm not holding a position, even though I flagged that sucker at 9 bucks. Okay, let's go to UAE. Actually looks very interesting here. It's a huge cup and handle. I'm going to come up to the monthly. That's one reason I like this visual, because it shows me, we have this ascending wedge. Sorry, it's not going to show it to me on the monthly, but it shows you the different patterns of what it recognizes. Beautiful cup and handle. I mean, it's structurally perfect. We come right down to this 1728. Boom. It's heading back to the upside, so I actually like that to the upside. All right, SSRM. Let me take a look at that. Still got targets overhead. 52 bucks. I'm assuming you're in it. Closes below that 23.99. I'd be trimming, taking profits. Closes below this shelf at 17.79. I'd be out. I don't know that I would add this. You can. Obviously, it's your book. You can do what you want. The main reason is the targets that I see here and how much we came off here. Notice how much resistance you have up here on this sell side imbalance. And I'm not trying to not sell you. I'm just, so you got this little box right here. Once we give that up, that's, it's right overhead. Yeah, we need to reject off of that and get some kind of back test, and then I would add on a back test. That's what makes more sense to me. DSV, take some partials, especially with silver rolling over, or I would take some partials just with this look. I mean, you're well up, 423.6, it's rejecting. I think silver has some upside. I just think this is a overbought correction. RSI is clean confirming. MACD is not broad, wide open. This is going low. Where is it likely going to go? Let me get that's a tough read. So peaking drive 1, peaking drive 2, let's call that 3. So we've got a full corrective potential from here. So, 618, 5 bucks is totally viable from where we are here. I mean, it could roll right over. Could push all the way back to the 308. It's done nothing wrong. Thanks, Tom. BRKB. Rough look. I've got it measured back to about 414 on the pullback. All right, well, last call, folks. Anything else? Actually, we did pretty good considering all the charts we went through. 45 minutes on that one today. All right. Well, be safe. Be well. Mind your positions. Make sure you manage your risk. That's for doggone sure. There's absolutely nothing wrong with being cash here, guys and gals. Nothing. There's just so much risk we have here. It's not even funny. But hey, until next time, great trading.